Hello traders, James Stanley with StoneX and Forex.com. 2 weeks ago, I looked at Bitcoin as a gold alternative. And not because I wanted to fade the move in gold or look for a reversal of that rally, as much as the fact that the gold move was starting to look a little bit overheated. And when we've had pause or consolidation in that gold rally over the last year and a half, it's been Bitcoin that's really seemed to benefit from that. Now, at this point, it looks as though a bottom or support might be trying to build into Bitcoin. It's still not confirmed yet because sellers took a pretty heavy swing earlier in the week, but we have some higher lows to work with. So I wanted to use what I looked at in last week's video, the 2 tenets of technical analysis, to see if there might be a workable series of support levels in Bitcoin that could lead to that bottoming formation. So let's get to the chart and start chopping this up. First and foremost, I wanted to look at the genesis behind the thesis, which is essentially that there have been a couple of instances where gold has almost like taken over that preference as an anti-fiat vehicle. The initial instance of this was back in summer 2020. Of course, this is when we had the COVID stimulus. Initially, gold rallied aggressively, had its first ever test of 2K in the first week of 2020. And you'll notice at the time, this is when Bitcoin was struggling to get back above the 12K level. Now, gold then held that resistance of 2K for the next 3.5 years. And as that happened, gold went through multiple life cycles. It rallied up to 65K in 2021 and then 69K later in the year. And this kind of proves that thesis that anti-fiat flows shifted from gold and into Bitcoin as gold stayed in that range for like 3.5 years. Now, more recently, last year, that's when gold started to come back to life in a very big way. We had gold finally getting comfort above that 2K level. And there was a key instance, and I talk about this instance a lot because it's one of those setups that just stuck out to me. But here you can see in early 2024 trade, 2K is finally starting to come in as support in gold after it was resistance for like 3.5 years. Last year, there were 2 days where gold traded below 2K. And it was after a CPI print in February. A day after that CPI print, Austin Goolsbee from the Chicago Fed, in a television interview, says, let's not get all flipped out about one inflation print. That was the Fed showing that they wanted to cut rates, even with inflation above target. And that is a hit to fiat currencies. It's dilutionary, as it's almost like acceptance of lower real rates. And you can see gold begins to rally and never looks back. There was just a couple of pauses along the way. And again, that rally very much remains today. I mean, we've finally seen a bit of pause after that parabolic move from Powell's speech at Jackson Hole. This is why I don't want to doubt the trend. This is why I don't want to fade it. This is why I don't want to look for a larger reversal. But there could be a case for an alternative in here. Now, these 2 instances are what really stand out in my mind in gold. And I'm going to reference these in Bitcoin in a moment. But first, just want to draw them out for you. So this is a symmetrical triangle formation. Symmetrical triangles are normally non-directional because it's higher lows and lower highs. It's digestion, if you will. But it doesn't necessarily point to a direction. But when you take the prior prevailing trend, that can add a directional component to it. So we have this non-directional triangle that had built. But we had such an aggressive rally that had led into that you have to imagine the positioning at the time when we go into that consolidation is heavily bullish. The fact that we're not seeing more profit taking and a deeper pullback and a larger retracement, that in and of itself is deductively bullish. That triangle lasted for 2 months. Again, it started this week. I'm going to earmark this because we're going to look at this in Bitcoin in a moment. That started October 28th. And it ran all the way until the New Year open. Let's make that a little thinner so it doesn't. There we go. And then the rally continued. So a bull pennant is a symmetrical triangle with a prior bullish move, often approached with the aim of bullish breakout, which is precisely what took place. And this one ran all the way until April 21st of this year, when the same exact thing happened. Symmetrical triangle builds. We have both higher lows and lower highs. We had such a strong prevailing trend a trend running into that formation, then again, you would take this otherwise non-directional formation, you would assign a bullish bias to it. But that one started, again, that's April 21st of this year, and it ran all the way until Jerome Powell's speech at Jackson Hole. Right there. And that last week of August. I believe this speech was actually August 22nd, but I digress. So, again, let's earmark these dates in gold and then look at the way that Bitcoin handled them. So it was that week of October 28th last year, which is right here. That's when gold started to break out of this digestion and then eventually ran up to 100K, 105K, technically. So again, gold is in that parabolic move, finally pauses in that last week of October, and you can see where Bitcoin comes to life in a very big way. And then same scenario, April 21st is when we had the high this year. Right in there. Same deal, right? That near parabolic-like move that had developed out of the bull pennant formation rolls all the way until April 21st, sets another high at 3,500. Bitcoin comes to life in a very big way. Runs all the way up to 120K, eventually 125K. Now, if we go back to gold, you'll see we finally have the first red week since that breakout from Powell's speech at Jackson Hole. And it's been a sizable red week as we retrace the entirety of the prior week's advance. Again, not necessarily something I want to look to fade directly, but it is something that I think could make for an attractive case in looking for an alternative. And that's where I think Bitcoin comes into play, and there's some possible bottoming in here that we might be able to work with. Now, going back to the chart that I had drawn up on this video or in these videos 2 weeks ago, it was the 125K level that was showing as resistance. That was very clean resistance as well. You'll see these upper wicks. And imagine what was happening intraday. You have the intraday breakout swatted down from selling. And then you get this lower high and a retest of 110. And then sellers evaporate that support. And it runs all the way down for a test of that same 105K level that had helped to come in as resistance on the initial run back in December of last year. But more recently, there's been signs of those sellers slowing down and bulls starting to take over a little bit. I think the big level here to reference is the 100K handle. That's been somewhat of a drama level in Bitcoin for a long time now. I mean, it's a major psychological level, so it makes sense as to why. But when this was falling aggressively into last week, buyers stepped in ahead of time. That's what helped to build this falling wedge formation. Falling wedges are noted from a more aggressive pitch or angle at resistance than what we have at support. So if this is a trend that has continuation potential, then you're going to want to see sellers really pushing when we get to support or at those lows. It's when they start to slow down that it shows that we might be coming into reversal potential. And that's what started to show more recently. We have these higher lows from last Friday's low and then this Wednesday's low. And then these are the levels that I had drawn on that video a couple of weeks ago illustrating those prior higher lows. Now that support structure still remains in place, and it's the 110 level that buyers haven't been able to leave behind yet. But given these higher lows, this trend line, which projects to tomorrow around 107.5, there is wherewithal for higher low support to continue to show on these shorter term charts. Now from the daily, you'll notice that you can still make the argument for lower lows and lower highs. We're still trading inside of that prior lower low and lower high. So it's not until we take out that swing high that we could say that the lower low, lower high structure on the daily is broken, breached, and it's now opened up for bullish resumption or bullish continuation. All that we have at this point is the defense or the protection or the re-entrance from bulls at those lows to try to protect those prior higher lows. And that gives us some structure to work with as we go into next week. But if we are going to finally see a pause show up in gold after that parabolic run over the last 2 months, this is the market that I think is attractive. If we haven't yet seen the low in play, it's 100 that I think is the major level. And I'm looking or would be looking for something similar to what had happened in June, where we get a dip below with the defense from buyers as indicated or illustrated by an underside wick. that then opens the door for short-term reversal potential. But that 100 level might not even be able to come into play given how we've seen bulls respond so quickly and aggressively already. But that, my friends, is what I have for this week's video. I'll look at this again in future videos as we have more price action to work with. It's still at a very early stage, but it could be at the forefront of a pretty significant support push in Bitcoin. Thank you.